This week in the economy, job numbers, tariffs, and interest rates. The U.S. economy is sending mixed signals, and the latest developments might leave you wondering what's really going on. This week brought a trio of major economic updates that could shape everything from your next job opportunity to the price of imported goods and even your monthly loan payments. Let's break it all down. First, the job market is showing signs of weakness. New job creation has slowed significantly, which might make it harder for workers to find opportunities or negotiate better pay. While the unemployment rate might still look decent on paper, the lack of strong hiring suggests employers are holding back, possibly due to uncertainty about future demand or economic conditions. And this is the part most people miss. Even though fewer jobs are being created, wage growth isn't picking up much either. That's a red flag for economists because it means workers aren't gaining much ground in this environment, despite labor shortages in some industries. Next, tariffs are on the rise again. The Trump administration recently announced new trade deals that include higher tariffs on certain imports, especially from China and other key trading partners. Tariffs can be a double-edged sword. On one hand, they're meant to protect American industries by making foreign goods more expensive. But on the flip side, they often end up increasing costs for consumers and businesses that rely on those imports. Here's where it gets controversial. Some experts argue that these tariffs are more about political messaging than actual economic strategy. Do they really help American workers in the long run? Or do they just create more instability in global markets? Finally, interest rates are staying put. The Federal Reserve has decided not to lower rates for now, despite pressure from some economists who believe cutting rates could give the economy a boost. Keeping rates steady might signal confidence in the current economic outlook, but it also means borrowing costs won't be dropping anytime soon. Mary Lovely, a senior fellow at the Peterson Institute for International Economics, joined NPR's Ayesha Rascoe to discuss what all of this means for everyday Americans. She explained that while the economy isn't collapsing, the combination of weak job growth, rising trade tensions, and unchanged interest rates paints a picture of an economy stuck in neutral. So what should we make of all this? Is the U.S. economy heading for a slowdown, or is this just a temporary pause before the next phase of growth? More importantly, how do these policies affect you personally, your job, your wallet, and your future plans? We'd love to hear your thoughts. Do you think higher tariffs are worth the potential cost to consumers? Should the Fed lower interest rates to stimulate growth, or is keeping them steady the smarter move? Share your take in the comments below. Let's get a real conversation going. Trump's economy, booming or bust? U.S. economic performance under Trump. Imagine an economy that's simultaneously booming and struggling, where growth is robust but job creation has stalled. Welcome to the U.S. economy under Donald Trump, where the numbers are as unpredictable as the president's tweets. But here's where it gets really interesting. Despite the White House's claims of a thriving economy, a closer look at the data reveals a more complex picture, one that's equal parts good, bad, and ugly. And this is the part most people miss. The chaotic mix of factors influencing the economy, from trade wars to interest rates, is making it difficult to discern what's really going on. So let's dive in and explore the latest economic reports, which have sparked a heated debate about the true state of the U.S. economy. On the surface, the news seems positive. The U.S. economy has returned to growth, with GDP expanding at a rate not seen since last summer. But as we'll see, this growth is not without its challenges. For instance, the first quarter saw an unexpected contraction, and the labor market is showing signs of slowing down. The picture is further complicated by the ongoing trade wars, which have led to wild swings in imports and exports. In fact, the surge in imports in the first quarter was so significant that it pushed growth into the red, while the subsequent plunge in imports in the second quarter boosted GDP. But what does this mean for the average American, and how will the economy fare in the long run? These are the questions that economists and policymakers are struggling to answer. One thing is certain, however. The Federal Reserve's decision to keep interest rates on hold has not gone down well in the White House. Despite Trump's public demands for a rate cut, the Fed is taking a cautious approach, waiting to see the impact of the president's trade strategy before making any moves. This has led to a very public spat between the White House and the Fed, with Trump accusing the central bank of not doing enough to support the economy. But the Fed is not alone in its concerns. Many economists are warning that the trade wars could lead to higher inflation and slower growth in the long run. And then there's the issue of job creation, which has stalled in recent months. A latest employment report revealed that far fewer jobs were created in July than expected, and revised down estimates for May and June by a staggering 258,000. This has led to a rethink of the economy's prospects, with many experts warning that the labor market is not as strong as it seems. So what's next for the U.S. economy? Will it continue to grow, or will the trade wars and other challenges take their toll? One thing is certain. The coming months will be crucial in determining the economy's trajectory. And this is where you come in. What do you think is the biggest challenge facing the U.S. economy right now? Do you think the trade wars are a necessary evil or a recipe for disaster? Share your thoughts in the comments below. But here's the thing. The U.S. economy is not just a numbers game. It's about people's lives. It's about the worker who's struggling to make ends meet, the small business owner who's trying to stay afloat, and the family who's trying to make sense of it all. So let's keep the conversation going. Let's explore the complexities of the U.S. economy, and let's work together to find solutions that benefit everyone, not just the few. The question is, are you ready to join the conversation?